It's Jake and Dustin again, and today we're going to talk to you about how the United States Federal Reserve System works as a central bank for the United States of America. The Federal Reserve System is a central banking system of the United States. It was created on December 23, 1913, with the enactment of the Federal Reserve Act, largely in response to a series of financial panics, particularly a severe panic in 1907. Over time, the roles and responsibilities of the Federal Reserve have expanded, and its structure has also evolved. Events such as the Great Depression were major factors in leading to changes in the system. The authority of the Federal Reserve System is derived from the statutes enacted by Congress, and the system is subject to congressional oversight. The members of the Board of Governors, including its chair and vice chair, are chosen by the President and confirmed by the Senate. The federal government sets the salaries of the board's 7 governors. Nationally chartered commercial banks are required to hold stock in the Federal Reserve Bank of their region, and this entitles them to elect some of the members of the board of the regional Federal Reserve Bank. As I mentioned before, the Federal Reserve acts as a central bank for the United States. In its role as central bank, the Fed serves as a banker's bank and the government's bank. As the banker's bank, it helps to assure the safety and efficiency of the payment system. As a government's bank or fiscal agent, the Fed processes a variety of financial transactions involving trillions of dollars. Just as an individual might keep an account at a bank, the U.S. Treasury keeps a checking account with the Federal Reserve, through which incoming federal tax deposits and outgoing government payments are handled. As part of this, the Fed sells and redeems U.S. government securities, such as savings bonds and treasury bills, notes, and other bonds. It also issues the nation's coin and paper currency. On February 3, 2014, Dr. Janet L. Yellen took office as the chair of the Board of Governors of the Federal Reserve. This is a 4-year term, and the term will end on February 3, 2018.
Under the Federal Reserve System, the United States is divided into 12 districts. Each district has an actual bank called a reserve bank serving it. But it's not the type of bank where an average citizen deposits money, rather it holds the funds of the Fed. The 12 reserve banks are named after the city in which they are located. Those are Boston, New York, San Francisco, Philadelphia, Cleveland, Chicago, Richmond, St. Louis, Minneapolis, Atlanta, Kansas City, and Dallas. Each reserve bank is run by a staff headed by a president or chairman who also help make up a very important Federal Open Market Committee. The Federal Reserve System makes money, and lots of it. The Fed nearly has $3 trillion in assets. The majority of revenue comes from open market operations, specifically the interest on the Fed's portfolio of Treasury securities, as well as the money that comes from buying and selling of the securities and their derivatives. Other Fed revenue comes from the sales of financial services like checks and electronic payment processing and discount loans to banks. There's also interest on foreign deposits within the federal banking system. However, the Fed doesn't really keep the money. The government receives all of the system's annual profits after certain expenses. In 2010, the Federal Reserve made a profit of $82 billion and transferred $79 billion to the U.S. Treasury.
As you can see, the Federal Reserve System is extremely complicated. We hope that you learned at least something about the Federal Reserve today and that you can join us next time to learn more about the federal government. Thank you very much for listening, and catch you next time.